Do we have a leadership problem at Tesla or a macro problem?
I think right now it's really been more of a leadership problem. I think that's been a big overhang on Tesla, not just because of the essentially Musk using Tesla as a personal ATM machine, but it's about the attention focused on Twitter as this twilight zone continues to, go on. And that's really been, I think, 70-80% of the sell-off in Tesla is Twitter driven.
And you still haven't outperformed a $250 price target on Tesla. Why?
I mean, look, it's the fundamental view. I mean, I believe it's one of the most transformational companies over the next 5-6 years, along with Apple. And that's why it's a fundamental bullish view. But no doubt, I mean, I think the clock struck 12 in terms of patience wearing thin. And I think that's what you start to see with a capitulation in Tesla in a risk-off market. And I think it's just really been, I think for investors, it's really a Ted Stryker airplane moment in terms of the view of Musk now.
Hey everyone, Couch Investor back to our video for today. So let's talk a bit about Tesla. What is dragging Tesla down? How long is this going to take? And what will actually happen with regards to Tesla, Twitter, and Elon Musk? We've just heard Dan I touch on a couple of points. We're going to touch on those points later on in this video as well. Going to start with some new price targets for the company, some positive, some negatives, and then at the end we're going to have a look at the chart and see exactly what has been happening with Tesla, the stock, on a technical standpoint. So if you're interested in that, sit back and relax, hit that thumbs up button and that subscribe button. I would really appreciate that. And if you want to support me and this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor and make sure to check out all the other links in the pinned comment. So we'll start with a new price target from Daiwa. They cut their Tesla price target to $177 on Twitter distraction. So they've lowered the price target from $240 to $177, but they are keeping the outperform rating. The analyst is now reflecting the Twitter distraction and weak macro environment into the estimates and stock valuation. He cut his 2022 and 23 earnings per share estimates to $4.10 and $5.30 from $4.15 and $5.75. He also introduced a 2024 earnings per share estimate of $6.90, assuming a 21% increase in deliveries, reflecting full year impact of Cybertruck sales and further ramp up of Tesla's Berlin and Austin plants. The target cut reflects a higher risk profile from the Twitter distraction, continues to view Tesla shares favorably on a fundamental basis, citing the company's increasing competitive advantage from the Inflation Reduction Act and potential innovations such as the 4680 battery with dry electrode process. We then have another new price target from Mizuho going from $330 to $285. They're keeping their buy rating there as well. The analyst sees a challenging auto end market globally into 2023, driven by high interest rate, energy prices, and financing rates affecting affordability. This could overshadow a more constructive auto production outlook as supply chains and production bottlenecks ease. While electric vehicles should continue to grow, high prices and stretched consumer could be real headwinds. In the near term, he sees Rivian as best positioned with its production ramping, large exposure to the US SUV market, and 32% valuation discount to Tesla's on 2024 estimates. And then we do have a more positive one from Deutsche Bank, buy rating and $355 per share price target. They added that Tesla expects a considerable benefit from the Inflation Reduction Act, including full $7,500 consumer tax credit and large direct incentives for its US battery manufacturing starting 2023. Now, they end by saying that Tesla is particularly focused on its game-changing next-generation platform, which, in our view, should support multiple other vehicles and segments, as well as robotaxis, and targeting $20,000 COGS per vehicle. Development is advanced and targeted start of production is 2024. So now that we've got that out of the way, let's talk a bit about the crucial points that were mentioned in those new price targets, and also a couple of things that were mentioned during that Dan Ives interview. Now, I do have to agree, and I think most of us already agree, that buying Twitter for $44 billion was a huge mistake. buying Twitter was probably not necessarily a big mistake, but buying Twitter for that price was a huge mistake. Because if, let's say, it was half that price, or if it was $30 billion or something like that, then maybe you could argue it was an okay deal, and it would probably have prevented Elon from selling billions and billions of dollars worth of Tesla stock. Because I agree with Dan Ive, I think most of the sell-off in Tesla stock has been because of Elon selling. Now, if we look at the actual graph, we can see it quite clearly. Twitter approves the deal, then we have an $8.3 billion sale in stock. Then after Twitter sues to complete the deal, we have a $6.7 billion sale in stock. And then after the Twitter deal closes, we have a close to $4 billion Tesla sale. And lastly, we have, well, the most recent one, $3.58 billion. Now, to be honest, we don't know if this is the last time. We've said this a couple of times already. Oh, he's done selling. But actually, no, he wasn't done selling. He sold more and more and more. And yes, in my view, the majority of Tesla's stocks crash is because of Elon selling. Elon is selling, puts extra pressure on the stock, puts extra fuel to the fire for the shorts, and then the stock just goes down, down, and down. So I don't want to hear anyone saying, oh, I told you Tesla was going to go under 150. No. If Elon wasn't selling, it would not have reached that point. That, in my opinion, I can assure you. Now, going forward, we don't know what will happen. Twitter is still losing a lot of money. We know that, well, Elon Musk has run that poll. Let's see what happens. Usually when he runs this type of polls, he already made his decision. So is he going to step down from being the CEO of Twitter? Who is going to replace him? We don't know. Lex Fridman is an option. Let's see if he can handle that. He certainly does not have the Tesla shares that Elon is using to fund this operation. But since Elon has paid $44 billion for this, well, company of his now, I don't think he will just let some random person run that company. But on the flip side, saying that the focus is now solely on Twitter and not on Tesla, that I cannot agree with. Where were those statements when he was running, well, he's still running SpaceX, Starlink, Boring Company, Neuralink? I mean, Tesla did pretty well during those years, so where was the critique there? Now it's probably just because of the public perception, because he's tweeting a lot, he's tweeting about some controversial stuff, even though most of these things I agree with him because, well, it is the truth. For years we've been lied to, and now the truth is coming out, and the truth hurts. Facts don't care about your feelings. So yes, it's not about the focus is not on Tesla. No, I do think that the focus is still on Tesla and SpaceX, and then maybe number 3, it's on Twitter. But yes, now that he is CEO of Twitter, and now that he is tweeting a lot about Twitter, yes, he's getting maybe a bit too much media attention, and most of the time it is negative because, well, we all know why. And so going on the other side of this Tesla spectrum, let's say this is probably a good thing. Let's say if you're a long-term investor, you can buy more shares for less. Now, of course, it hurts long-term investors as well in the short term because, well, the shares are down 60%. So there is that. But we do have some good news with regards to Giga Berlin and Giga Texas. So first up, we have here a congrats to the Giga Berlin team on building 3,000 Model Ys this week. This makes around 156,000 per year if it stays at 3,000. We know that's not the case, but this is already a good starting point. I believe they wanted to reach 5,000 per week by the end of the year. I don't think that will happen, but this is already pretty positive. Now, if we scroll down and we go a couple of days back, we can see that Giga Texas also hit 3,000 Model Y builds per week. So you're sitting here at more than 300,000 vehicles per year from these two young factories. Obviously, that number will continue to go up pretty fast, especially in 2023. And so if you, let's say, take out all the noise, which is basically Twitter related, and look solely at Tesla's fundamentals, Tesla's business, Tesla's new factories, how is that ramping up? Of course, there are still some questions with regards to demand. We know that across the board demand will be an issue, right? If we're going into a recession, high inflation, etc., yes, this is what happens. But like the Deutsche Bank analyst said, Tesla is best positioned to go through that soft demand period. Why? Because it has those high margins, because it has that state-of-the-art factory. Of course, in the short term, this will hurt the fundamentals, and that's why you see some price target cuts, because those are usually 6 to 12 months out, when we'll see the economy rebound a little bit, when we'll see inflation drop even more and more. Maybe we might see some, let's see, even slower rate hikes, then maybe some price targets will be changing there. But what I'm looking for is obviously the next production and delivery numbers and Tesla's Q3, and maybe let's hear something on the earnings call about how 2023 will look, because I do think 2023 is going to be an interesting year. Will probably resemble 2019, where, well, it was all doom and gloom for Tesla, and we know very well what happened after that. If you don't know, well, let me show you the graph for a second here. So if we're taking 2019, the same period we are right now, so this is around $30 or so. We're now at 150. You did pretty well, all things considered. Obviously, at one point, you're up more than 10x on your investment. But let's look at what has happened right now. This is the weekly chart, by the way. We can see here that in the past couple of weeks, twice we have failed to go over that 20-day moving average. When you get rejected like that, usually what happens, well, you go down even further. When we look at the RSI, we're still not oversold, but we're pretty close to that. If you look at the MACD, still pretty bearish there, no real sign of reversals. And if you look at this red candle right now, we're Tuesday, still a couple of days left, then we have holidays. I don't know if we're gonna see a lot of volume in the coming days and weeks, but right now it doesn't look great. And so to conclude, and now I know we're all sounding extremely bearish when we talk about the current state of Tesla, because let's face it, the current state of Tesla stock is not great. The current state of the company, probably much better. But I'll keep repeating this, and you'll probably hear this from a lot of people out there. The problem right now is probably the market's focus on Twitter and Elon being the CEO of Twitter, the Twitter overhang 2.0, let's call it. Let's see what happens with that. I don't think he'll just step down being the CEO that fast. He will probably need to find someone extremely good and talented to run Twitter. Now, when he does that, it does not mean that he has walked away from Twitter. Let's be clear on that. He didn't pay $44 billion just to walk away after a couple of weeks. No, he might just be a bit more in the shadows where the media can't attack him that much, even though we all know that will never happen. So overall, I'm still extremely bullish about Tesla's long-term success, still my number one position. And yes, if it keeps going down, I'll have no choice but to get more shares in my portfolio, because I'm in it for the long term. I bought actually first time in 2019 where there was doom and gloom. Of course, it was risky, but if you look at the fundamentals don't lie. So that will be it for this video. Obviously, do share your thoughts down in the comments below. What do you think will happen? Let me know down in the comments below. And if you enjoy this type of videos, leave it a thumbs up and subscribe if you have not. And I'll see you all in the next one. Bye-bye.